Hey everyone, welcome back to the Nadlan Forum Podcast Daily. I'm Ruby, here as always with Lior. So, straight up, did you check out the PCE numbers for July, Lior?
Yeah, absolutely. There's a lot to unpack. Headline PCE up 0.2% from June and holding steady at 2.6% over the year. Not a major surprise, but still, it's above that magic 2% the Fed keeps talking about. And core PCE, that one jumped up 2.9% year over year. That's the highest since what? February? It tells you inflation's just not going away as fast as people hoped.
Totally. And when you break it down, it's like durable goods up by 1.1%, services up by a big 3.6%. That's the sort of thing everyday people feel, right? Like when your insurance or transport costs jump, you notice that way more than, say, another $1 on milk. And I mean, this stuff gets personal. My first apartment in Sydney, right as inflation started to bite, my rent shot up mid-lease and all the groceries seemed to go up. But the biggest pain was always services. That sticky pricing, you know?
I get it. Even here, services tend to be sticky since you can't just shop around the same way you do for, let's say, electronics or gas. Actually, that services jump 3.6%. It's partly why households, I think, feel squeezed even if headline inflation is only 2.6%. Like the loudest pain is in the recurring stuff. And wages went up too, but not by much. 0.6% after basically stagnating in June. But that doesn't always mean you can cover rising costs, right?
Yeah, exactly. And it's interesting. Personal savings didn't go anywhere, just sort of flat at 4.4%. People aren't splurging, but they're not tucking away much extra cash either. That's a classic sign of anxiety, I reckon. People keep hearing about inflation all the time, and even the tiniest increases start to feel like, am I missing something? Should I be saving more, or what's my move here?
100%. And investors are watching these numbers like hawks, because it tells you if people are going to keep spending and what's going to happen with rates, which affects everything in real estate and mortgages.
It all loops back to the same vibe. Everyone's just a bit on edge. And we'll see how the Fed chooses to play with all this info, right? Speaking of which, we had Powell up at Jackson Hole last week. Felt like he was walking on eggshells. Very careful, very non-committal, you know? He basically said, look, inflation's not conquered, but if they cut too fast and the labor market gets even weaker, that's a big risk too.
Exactly. And there was that point about tariffs. Powell said some of these price increases might just be temporary because of tariffs. But if they're more sticky than expected, that's a headache for the Fed. It's almost like they're trapped. Cut rates too soon and you risk more inflation, wait too long, and the job market softens more. Actually, this reminds me, I was advising a startup founder recently. He was in the middle of a funding round. And suddenly, his investor pushed back, saying that interest rates are just too uncertain right now. That changed everything for his cash flow projections. I mean, people forget the Fed's moves ripple out to every little decision, not just in Wall Street, but for entrepreneurs every single day.
And let's not forget, producer prices are rising too, so the pressure is bubbling up from the supply chain. It just takes a minute to move through to what you and I see on shelves or in invoices. And with the labor market softening, Powell's word, not mine, it's like they're getting pushed from both directions. In a previous episode, we talked about how those policy swings can create real whiplash for everyone in real estate. It's not even just about rates anymore, is it? It's about how much uncertainty is out there.
Yeah, it's always about managing risk, right? Whether you're advising a business or looking at your own house payment, right now you have to be ready for anything. What Powell said, something about the labor market in a curious balance, it really hit the nail on the head. There's not enough clarity right now, and that's making everyone, especially investors, pretty nervous. If you're in real estate or you're a borrower, you've got to follow these Fed comments closely because they set the tone.
It's like you think the rules are clear, then the jobs data flips and suddenly everything is up for guessing again. So all of that sort of leads us right to what's happening with rates and borrowing, doesn't it? So let's talk mortgages. And it's a roller coaster. With inflation this sticky and the Fed so kind of on the fence, mortgage rates just won't budge lower. That's what we've seen the last few months, right, Lior?
Absolutely. Compared to that lull we talked about in previous episodes, now you've got investor nerves and the data all pushing rates higher. Even though the CME Fed Watch puts the odds of a rate cut in September pretty high, like 87%, the market's still in this, holding pattern. The messaging from policymakers is, we might cut but don't expect fireworks. It's all tentative.
Yeah, had this chat last week with a recent mortgage applicant. She got quoted one rate in late June, and by mid-July, the numbers had shifted. Not dramatically, but enough to really bump up her monthly payment. She kept asking me, should I have locked it in sooner? Are they going to shoot up again? And honestly, I didn't have a perfect answer. It all comes back to those Fed signals and the next batch of labor data. That's what's driving everything right now.
For sure. For anyone looking to buy or invest, you really have to pay attention to the actual announcements from the Fed, not just the headlines. Like one inflation number comes in hot, and suddenly the mortgage markets react instantly. And policy is going to stay measured, at least if you believe the strategists. So this period, uncertainty is the name of the game. Households and entrepreneurs especially, if they're looking for financing right now, it's never been more important to have good advice and stay nimble. And like we always say, don't get locked into one assumption.
Yep, so if you're listening, keep your ear to the ground. We'll keep breaking it all down week by week. Lior, any last thoughts for today?
Just that whether you're buying, refinancing, or building a business, this is a market where knowledge and timing are everything. We don't know what September will bring, but we'll be here to unpack whatever the Fed throws at us.
That's it for today, folks. Make sure to subscribe so you don't miss our next update. Thanks for hanging out, Lior.
Thank you, Ruby. Always a pleasure. Bye, everyone.
Catch you all next time. Cheers.